Welcome back. You're watching Buy Now, I beg your pardon, Markets at Noon on ET Now. And let's put the spotlight on the banking space. So what exactly is happening in the banking space? So is it the private sector banks that will be one up when you compare it to the PSU banking space? And which is the pockets of safety when it comes to the banking pack as a whole? We have Rikin Shah, who is the Vice President at IIFL Securities, joining us on the show, or rather in our studios. Thank you so much, Rikin, for joining us. And let's firstly talk about banks. We know the bank is a very vast space. Private sector bank versus PSU banks. Everyone still wants to put their bet on private sector banks, but they haven't performed well when you talk about stock price, when you compare them to the PSU banking space. Which side of the fence are you on currently? Do you think the private banks, irrespective of what is happening to the stock prices, they will still perform better when you compare them to PSU banking names?
Okay, thank you, Cheryl and Winnie, for having me on your show. Within the banking pack, let me break this into two parts, the near-term view and the longer-term view. For the near-term view, the larger private banks have been underperforming, and we expect this relative underperformance to continue probably for another couple of quarters. So if we take a step back and look at the reasons behind this underperformance, both of those reasons are likely to persist. Firstly, if we look at the growth momentum, the loan growth has to be materially slower than the deposit mobilization. So what we are saying is that the private sector banks will be growing their loan book at 200 to 400 basis points lower than the deposit mobilization run rate. And that's a function of very elevated LDRs that they are seeing currently. They are anywhere between 85 to 95% and at least 10 to 20 percentage point higher than the PSU banks. So the loan growth momentum would be relatively subdued for private banks in the coming quarters vis-a-vis the PSU banks. And second is the margin. So we have created this repricing framework to estimate what is the residual cost of deposit repricing remaining for all the banks. And there the conclusions are that some of the larger private banks like ICICI and Kotak are likely to see further increase in the cost of deposits and hence headwinds on the margins. These two factors, combined with the fact that the investor positioning is still skewed towards private sector banks, means that we can expect some more pain or underperformance on a relative basis in the near term. But if we take a slightly longer term horizon, that is where we have a clear preference for private over PSU banks. And maybe I can talk about that in a bit more detail if required.